wabarakatuh. So today I'm going to explain about the document and record in the sale and collection cycle. Alright, so before I going to explain the document and record, which are the customer order, sale order, good delivery note and sale invoice, we need to know the flowchart of the sale and collection cycle. Alright, so before I explain further on the document and record the sale collection cycle, we need to know the flowchart of the sale and collection cycle first. So as we can see here in this flowchart, we have the sale department, shipping department and account department. Alright, I'm going to explain only 4 documents as I said earlier, which are the customer order, sale order, good delivery note and invoice. Alright, so the first one, as we can see here from the sale department, when the customer come to the shop, the sale department will receive the customer order. So this is where the customer order are issued by the customer, okay, and received by the sale department. So when the sale department receive the customer order, so the sale department will issue the sale order to get approval from the credit manager, as we can see here, this one. So apa function approved by credit manager ni? Contohnya, for example, company tu dia kata maybe walk-in limit dia just 10k, okay, and maybe the customer tu nak beli barang tu more than 10k. So bila nak situ dia kena approval for the credit manager, okay. Ataupun contoh yang lain ialah contohnya kalau maybe dia dah existing customer, maksudnya dia dah pernah beli and dia still ada hutang tak habis bayar lagi. So maybe dia before dia nak proceed nak beli barang baru, dia kena clear the settlement lah, maybe kena settlekan the payment first, baru boleh proceed to the beli barang yang baru. So kalau dia tak bayar, selagi itulah dia tak boleh. Faham? Okay, so next, when the sale department has issued the sale order and have been approved by the credit manager, so we proceed to the next transaction, which is at here. Okay, we go to the shipping department. Okay, the sale order will go to the shipping department, okay, for what? For inventory check and record. Maksudnya kat sini daripada sale order tu, shipping department akan check berapa barang customer tu nak beli, barang tu ada ke tak, berapa semua, and then bila dah tu dia akan pack barang tu, okay, dia pack produk yang customer want to buy, okay. So dia akan shipping date, okay, this year they say the shipping date indicate on the sale order, maksudnya bila yang customer tu nak barang tu untuk di deliver, okay. So bila dah pack apa semua, so the shipping department ni akan issue the shipping document and delivery note, okay. This is where the good delivery note are issued by the shipping department, okay. Bila dah bagi tu, dia akan bagi tu customer untuk apa? Untuk inform customer tu, okay, to inform customer that the good has been delivered and shipped by the company tu lah, okay. Alright, so bila dia dah bagi tu customer, barulah sale order and good delivery note ni akan go to proceed to the next department, which is the account department. Yeah, the account department ni, the function of account department ni the account department will issue a sale invoice, as we can see here, the sale invoice to be given to the customer to inform on how much the customer need to pay, okay. And maybe they have the term, maybe the account department say that they can give discount if the customer pay within 30 days, okay. So kat sini dia akan beritahu lah customer tu berapa banyak nak kena bayar, berapa dia punya term dia semua, and then the account department dia akan record insert journal and record the cash receipt journal, okay. Dia akan update ledger. Alright, so this is the simple flowchart lah, kiranya nak tunjukkan macam mana how the the 4 document yang akan ada dalam sale and collection cycle. So first one is customer order, bila customer issue customer order, give to the sale department, okay. The sale order pula, when the sale department issue a sale order to get approval for the credit manager, okay. This is more to credit department lah, dia akan minta approval for the credit manager. So when the sale order be approved to credit manager, okay, dia akan proceed to the next department, which is the shipping department, okay. For what? For inventory record and check. So maksudnya nak tengok berapa banyak customer order, nak tengok barang tu ada ke tak, okay. Bila dah ada apa semua, dah prepare, so dia akan pack, okay, and dia akan ship barang tu to the customer. When dia dah ship tu, dia akan kena bagi apa? So the shipping department must issue a shipping document and delivery note to inform customer that the good will be delivered and shipped. Okay. Bila dah issue shipping document and delivery note, dia akan proceed to the next transaction. Okay, the sale order, shipping, delivery note. Okay, dia akan proceed to the next department. Untuk apa? Untuk sale invoice. Okay, untuk account department tu issue sale invoice untuk bagi kat customer untuk beritahu berapa banyak dia bayar, kena bayar, dia punya terms. Okay, bila dah bayar apa semua, so the account department need to record in the sale journal and cash receipt, and dia kena update sale ledger. Alright, so this one is the simple flowchart lah to know the 4 document in the sale and collection cycle. Alright, this is more the short flowchart, which is the more simple lah lagi bagi senang nampak. Okay, so the first one when customer order received by the sale department. Okay, the customer order at here, so customer order, and then they akan proceed, the sale department will proceed to create the sale order lah, as we can see here. Alright, so when the sale order dah dapat, dia akan go to the create delivery note for sale order. Alright, so this is where the delivery note, and then we pick and pack material is on delivery note and ship good. Alright, so this is where the material has been shipped to the customer. Okay, so function delivery note ni untuk inform customer ni nak kena bayar, nak ship barang tu. Alright, so when the material has been shipped, okay, alright, so the delivery note and the sale order we go to the accounting department to create billing for customer. This is where the invoice is issued by the accounting department. Okay, so when dah tu dia akan receive customer payment. Okay, accounting department pun kena buat payment, akan buat update dia punya sales journal and general ledger semualah. Alright, as I explained earlier, the customer order. So what is customer order? Customer order is a request for good from an existing or a new customer received by the sales representative or other personnel in the sales department. As I said earlier lah, maksudnya customer order ni maksudnya dia issued by customer, existing or new customer, okay, and received by the sales representative or other personnel in the sales department. Okay, so the function the customer order ni to for the customer to describe to tell the sales department on what product they want to buy, the quantity. Alright, so when conducting an internal audit of order processing, so we might need to look out for the following controls. So the first one, we need to test to make sure that someone checks stock availability before accepting the customer order and any stock are tracked. Okay, so the second one, we need verify that for manual order processing, customer order are sequentially numbered and completely checked by the responsible manager. Alright, so other than that, the internal audit must verify that the system order are completed fully with data validation control on items such as the order date. Alright, so the last one is the auditor must make sure that outstanding customer order are regularly reviewed and clear. So kalau tak check kat sini, maybe ada yang tak perasan apa semua kan. Okay, alright. So the customer order form, as you can see here, on top of this we have the company name, alright, and the company detail. And on the left side, on the bottom side of the company detail, we have the order info, which is the order date, order type, and the right side with the customer info, which is their name, their phone number, their email, and maybe their address. Okay. On this table, as we can see here, we have the item description, which is what product that the customer want to buy, unit price, which is the price per unit, and the quantity on how much customer want to buy, and we can get the grand total at here. Alright, so as we can see here on the bottom part, we have the payment information. Okay, so customer order, it's important to know on how customer want to pay. Maybe they can pay by cash, maybe by credit. So but mostly maybe dipakai in credit credit term. So dia akan guna bank, right? So yang term and condition ni maybe if the company the term, maksudnya dia ada buat maybe dia ada buat term lah, term and condition, maksudnya maybe kena bayar. If bayar within 30 days, the company give discount 5%, cash discount. Okay, alright. So this is the condition. So if the company nak ada buat dengan customer, maybe dia ada buat terms dengan customer, so dia kena tulis lah kat bawah ni apa yang term dia kena ada. Alright. Alright, next the sale order. So sale order ni they issue by the shipping department when they receive the customer order from customer. Alright. So what is sale order? Sale order is the document recording the description, quantity and other related information of the good and service order to confirm the order received by the sale department. Okay, and give to credit department for credit manager to approve, and shipping department for inventory check and update. They are also used internally for credit approval and authorization for delivery of goods. As I said earlier, maksudnya sale order ni they issue by the sale department and give to the credit department for approval for the credit approval, and to shipping department for the inventory check and update. Okay, kat sini dia ada dua. Maksudnya sale order ni dia ada dua function. So the first one, dia akan give to the credit department for credit approval, and to the shipping department for inventory check and update. Okay, alright. So key observation note from the review sale order. Okay, so maksudnya kat sini yang kita kena tengok. Okay, maksudnya discount are currently not being tracked on an overall basis. This lack of discount information hinder management ability to create and maintain effective pricing strategy. Maksudnya kat sini kita kena pentingkan, kalau ada bagi diskaun kita kena describe kat sini. Okay, kat sini dia ada diskaun. Okay, as I said earlier, bila ada bagi term within 30 days dia akan bagi cash discount. So kena letak kat sini. So takut nanti kalau nak audit takut tak ada, nanti diskaun tu dah hilang. Okay, transaction dan diskaun bagi cash diskaun tu tak ada. Okay, alright. So discount authorization documentation incomplete or missing. So potential authorization discount may be given to the customer where result in lost revenue and undermine the company overall pricing strategy. Maksudnya kat sini bila tak ada diskaun tu dia akan lost revenue. Maksudnya kita hilang, kita rugi. Mana diskaun yang bagi tu lah. So kita kena detail lah. Maksudnya kat dalam sale order ni detail. So bila ada bagi diskaun ke apa kena beritahu kat sini. Okay. As we can see here on the left side of this slide, we have the sale order form template lah. Contoh for example lah. So on top of this we have the company name. Okay, which is maybe our company name apa semua, the email address, contact number. Okay, so on the right side we have the date, the sale order number and customer number. Okay, so kat sini customer number ni contoh maybe kita dah ada record. Okay, for maybe existing customer dah ada dia punya customer number dia berapa, maybe 101 dia ada for okay, so dia ikut company tu lah berapa. Okay, alright. So on the bottom part of the company information we have the bill to and the ship to address. Alright, so this is the different one. Okay, these two is different one. So bill to address ni more to the when we want to issue billing and other related information. Maksudnya kat sini contohnya dia satu company, maybe dia ada banyak outlet. Okay, so maybe bill to tu dia akan bagi dekat company punya main office, and ship to address ni maksudnya dia akan bagi maybe kalau kita contoh retail company contohnya macam 7E, dia nak ship to banyak outlet. So yang banyak-banyak outlet tu dia kena letak kat address yang kat sini lah, bukan kat sini. Kat sini more tu macam main office, ataupun maybe dia ada tempat dia untuk dia nak issue apa semua billing related information lah. Okay, as we can see we are the sale person, which is the person who is responsible for the to create the sale order. Okay, and they are the ship via shipping date and the delivery date, payment on how customer want to pay, the shipping item and the shipping method. Alright, on the bottom part we have the description which is what the customer want to buy. Okay, and the quantity on how much customer want to buy, and the unit price is the price per unit. Alright, so that's all for the sale order. Okay, so we will proceed to the good and delivery note. Alright, so good and delivery note. As I said earlier, okay, delivery note is a document prepared at the time when the goods are shipped and delivered. Okay, detailing the description, quantity shipped and other relevant data. Okay, good delivery note is being prepared by the shipping department as evidence that the good has been shipped to the customer. Maksudnya kat sini, good delivery note ni they issue by shipping department and give to the customer. To apa? To inform the customer that the good has been shipped lah. As we can see here, okay, we have the this is the example, the good delivery note. Okay, as we can see here we have the company name and maybe company detail lah. And on the right side we have the order date, okay, the order number, delivery note number, customer ID. Maybe they done maybe this the customer is the existing customer of the company, so they have their own customer ID. Okay, and delivery method by what? Okay, so they have two: shipping address and invoice address. As I said earlier, shipping address is the ship to address, and invoice address is the bill to address. Okay, and they akan on the bottom part we have the description of the product, maybe what the customer want to buy. Okay, so this is the order. See, on how much the customer order and deliver, on how much the company has delivered the product. So maybe as we can see, we are kat sini dia ada outstanding. Maksud kat outstanding ni maksudnya still tak deliver lagi. Contoh maybe for example the customer buy 10 product, okay, 10 product, and our company only sell only deliver 5 only. So kat sini kena ada tulis outstanding dia ada berapa, ada lagi 5 tak bayar, tak deliver lagi. So kat sini untuk inform customer tu untuk tahu, there are still 5 product that still has not be delivered by the company. Okay, so this is the important for the document, important document for the customer and also for the company, okay, to inform as the evidence and to inform the customer that the product has been shipped. Alright, so the next one is bill of lading. Okay, bill of lading ni is similar to the good delivery note, but it involves a third party. Okay, right? So what does it mean, a bill of lading? Okay, a bill of lading, BL or BOL, is a legal document issued by a carrier to a shipper. Alright, this one that detail the type, quantity, and destination of the good being carried. A bill of lading also serves as the shipment receipt when the carrier deliver goods at the predetermined destination. This document by accompany the ship product, no matter the form of transportation, and must be signed by an antara representative from the carrier, shipper, and receiver. Okay, so maksud kat sini bill of lading ni maksudnya dia nak the company deliver product using the third party lah. Maksudnya kat sini maybe pos laju ke, DHL, or maybe ada courier service. Okay, maksudnya kat sini dia ada 3. Okay, so dia kena ada 3 sign, which is from the carrier, from the shipper, and from the receiver. Okay, as we can see here on the bill of lading template, we have the shipper signature. So maybe the company punya representative, maksudnya shipping department tu dia sign. Okay, consignee signature maksudnya orang yang menerima barang tu, maksudnya maybe customer tu lah, bila dia nak dapat kan. So bila dia dah dapat tu dia kena sign bill of lading ni. And driver signature ni more to the third party lah, maybe pos laju, DHL, or any shipper, any courier service yang ada lah. Okay, as we can see here, we have the shipper with the ship date. Maybe our company, for example we have the company want to ship the product on the 1st January 2016. So we must include here. And then we have the company detail. Okay, alright, so this is the carrier. Maybe kat sini contohnya macam pos laju ke, maybe DHL or maybe JNT. Okay, carrier ni tukar yang bawah ni lah. Maksudnya and consignee ni orang yang akan menerima, mostly the customer lah. Maksudnya dia akan, due date dia kata bila, maybe dia kata on the 1st May 2016. Okay, so kat sini and dia ada all free charge. Okay, maksudnya third party bill tu. Okay, dia ada third party lah, dia invoice third party. Okay, and then dia ada special instruction. Okay, consignee special instruction and the shipper special instruction. Apa yang dia nak cakap, maybe kena agree ke apa, dia ada term and condition, they must be agreed lah by the carrier, shipper, and the receiver. Alright, so before landing ni mostly they involve third party, and good delivery note ni maksudnya company tu straightforward give to the customer. That's the difference between the good delivery note and the bill of landing. Right? Right, so the last document that I'm going to explain is sale invoice. Okay, so the other document will explained by my friend, which is saya agent. So what is sale invoice? So sale invoice is a document indicating the detail of goods sold, such as the description, quantity, term of sale, and total price bill. Alright, the sale invoice issued by the accounting department used to inform customer of the amount they owe. Okay, the amount yang berapa dia hutang in exchange for good or service that was sold and include information as to when payment is expected. Maksudnya dia kena beritahu. Okay, dalam ni maksudnya kat sini sale invoice ni untuk issue by accounting department to inform customer amount dia own, berapa dia hutang. Okay, and untuk include information bila dia nak bayar. Okay, so as we can see here, this is the sale invoice template lah, contoh kan. So as we can see on top of this, we have the company name, company detail apa semua, address, phone number, maybe email or website. Okay, on the right side, on the top right side, we have the date, the invoice number and the customer ID. Maybe the new customer or existing customer, dia dah ada dia punya ID dia. Okay, and this one, they have the bill to and ship to address. Okay, ship to address ni barang yang bill to address ni ialah address that related to the billing information lah. So the more to billing, maksudnya selalunya dekat sini main office, and ship to address ni maksudnya maybe dia bagi kat outlet yang lain. Alright, so kat sini dia ada sale person. Okay, where the responsible person that issue the invoice, that sale person maksudnya kat sini dia ada maksudnya kat sale department tu siapa yang responsible yang daripada first tu. Alright, dia ada ship date. Alright, dia ada FOB and dia ada terms dia berapa. Alright, on the bottom part we have the description yang berapa yang dah berapa produk yang customer want to buy. Okay, quantity, this is on how much the quantity that the company have delivered to the customer. And then we have the unit price, which is the price per unit of the product, and the total. Alright, as we can see, we have the total here. This is the amount the customer own amount the customer the amount the customer own from the company. Right, so there's this is the special instruction. Okay, this is what you call a term and condition lah. Maksudnya contoh, for example, company tu bagi total payment due in 30 days. Okay, maksudnya kat sini in 30 days customer must pay to the company. Alright, so dia kata please number on your check. Maksudnya please include invoice number. So maksudnya kat sini maybe kalau the customer want to pay by check, so must include the invoice number at here. So untuk dia tahu mana untuk check balik. Okay, so this is the important the important of the document in the sale and collection cycle. Okay, so kita kena faham flow dia. Macam tadi saya cakap, from the first one, when customer give to the when customer issue the customer order and receive by the sale department. So the sale department akan buat apa? Dia akan issue sale order. Okay, function sale order ni to get credit approval from the credit manager in the credit department, and to shipping department untuk inventory check and update, untuk tengok berapa banyak. Bila dah check apa semua dah pack, so shipping department akan buat apa? Dia akan issue good delivery note and give to the customer untuk inform the customer that the good has been shipped. Right, bila good has been shipped, so dia akan ada sale order, dia akan ada good delivery note, dia akan go to the give to the accounting department to issue apa? To issue sale invoice, untuk issue berapa on how much amount they own, so the customer own, and when the payment is expected. Okay, so the benda tu the only 4 document that I have to explain. So the other document will be explained by my friend. Alright, so that's all for me. Thank you.
Hi, Assalamualaikum. Name is Izan bin Izamin from SU105P. Previously, I had discussed with us about the sales invoice. Now, I'm going to go through with you guys with the sales journal. Okay, first of all, what is the sales journal? Sales journal, also known as the sales book and sales day book, is a special journal that is used to record all credit sales. Every transaction that is entered in sales journal essentially results in a debit to account, receivable account, and a credit to sales account. But all cash sales are recorded in another special journal known as Cash Receipts Journal. Here, the term sales refers to the sale of only those goods or merchandise in which the business normally deals. The sale of used or outdated assets such as old plant, machinery, equipment, and newspapers are not recorded in sales journal. These transactions are entered in general journal, or also known as journal proper. In short, sales journal is a journal for recording sales, and it serves as a posting summary to the general ledger. Okay, next, the credit note. A credit note, also known as a credit memorandum or a credit memo, is an official legal document just like an invoice or a purchase order that suppliers provide to customers to notify the customer that credit is being applied to their account for any number of reasons. It's a way to issue full or partial refunds for invoices that have already been used, issued, or paid. Credit note is raised as a result of approval for customers' returns or granting allowances to the customers. Its functions is like an invoice, but acts in the opposite way, that is, indicates the amount to be deducted from a customer's account. Next, sales returns and allowances journal. In normal course of business, when customers receive damaged, defective, low quality or otherwise undesirable goods, they may return them to the seller or may have the option to retain them at a reduced price. Sales returns occurs when a customer does not accept such goods and return them to the seller for a full refund, or credit and sales allowances occurs when a customer chooses to accept them but at a reduced price. In a company's general ledger, the sales returns and the sales allowances are recorded in a single account known as the Sales Return and Allowances Journal. Well, sales return and allowances journal is similar to the sales journal mentioned above, but it records the sales return and allowances on the other hand, such as the credit note. Lastly, the Remittance Advice. Remittance Advice is a proof of payment document sent by a customer to a business. Generally, it's used when a customer wants to let a business know when an invoice has been paid. In a sense, remittance slips are equivalent to cash register receipts. They're particularly helpful when it comes to matching up invoices with payments. But because of online payments are becoming increasingly popular, remittance advice slips are sometimes unnecessary. However, after an invoice has been paid, sending a confirmation email is always appreciated. So in short, remittance advice is a document prepared by the customer, indicating his name, the number and the amount of individual invoices paid by him. That is, this document is received from the customer with his payment. I think that's all from me.
I'm Shahid Muhammad Nasir, and I'm from AC110 5P, and today I'm going to present about sales and collection cycle, and my part is on three documents, which is include the cash receipt journal, account receivable ledger, and also monthly statement. So we go for the first one. The first one is cash receipt journal. What is cash receipt journal? Cash receipt journal manages all cash inflows of a business organization. It is used for recording cash receipt from cash sales. Okay, we see here, this is cash sales, collection, and all other cash received. For making entries in a cash receipt journal, the receipt of cash is usually divided into three, which is the first one is receipt of cash from cash sales. So maknanya you dapat cash from your business main activity. And then the second one is receipt of cash from credit customer or receivable. This one you dapat from customer yang bayar secara kredit, bukan secara bayar tunai terus, dia bayar kredit, which is monthly. So every month you dapat duit from that customer. And the last one is receipt of cash from other resources. Here maksudnya you dapat other resources ni penting tau, sebab you maknanya dekat sini other than you punya main business activities. Contohnya macam you jual ikan, tapi you tak dapat income from the ikan tu, you jual apa ni, macam keropok ke apa, yang tu ada sources. Okay. Okay, we tengok apa yang ada dalam cash receipt journal. Kita boleh tengok sini ada date, and then we can see here account credited, and then PR. What is PR actually? It's a post reference, and then explanation, cash debit. This is all the accounts that terlibat dalam catatan yang perlu dicatatkan dalam journal ni. Okay, we go to the next slide. Okay, di sini here we can see explanation of cash receipt journal. Apa yang ada dalam cash receipt journal yang macam saya cakap tadi. Okay, the first one is date. Date tu kita kena tunjuk apa bila kita dapat cash itu. So kita kena catat tarikh tertentu yang kita dah receive the cash. The next one is account credited. The account credited column is used to enter the title or the name of the account that is credited in ledger as a result of cash flow. Okay, contoh you dapat duit from Ideal, and then you kena tulis nama Ideal dalam tu, so that you can tahu siapa yang you dapat duit. Duit tu datang dari mana, sumber dia dari mana. Okay, so here kita enter the title or the name of the account that is credited in ledger. Okay. The next one is post reference. Post reference ni biasanya dalam journal tu dia tulis PR je, sebab short form, so senang orang nak tengok. Okay, the post reference ni apa? Dia guna untuk enter the account number of subsidiary or general number account to which the entry belong. So here ni kita kena tally dengan general account, general ledger account. So contoh dekat general ledger account tu kita letak as O1. So kita kena letak here post reference pun O1 juga. So that nanti kita nak tengok tally ke tak, nilai dia sama ke tak, orang tu sama ke tak dengan apa yang kita tulis dalam journal. Okay, the next one is an explanation. Explanation ni macam biasalah kita just letak a reason. It is a reason why we receive the cash from that person. And the next one is the cash column, the amount. Berapa cash ni, berapa nilai cash yang kita dapat from that person. So we have to enter the account and the exact amount, bukannya tambah ke tolak. And then the next one is sales discount. Sales discount ni kita kena letak berapa diskaun kita bagi dekat customer. Okay, dia cakap here seller allow discount to customer that make payment within discount period. Okay, so mostly kalau customer tu buat dia bayar through credit, the seller will provide the discount for them, nak bagi dia orang bayar awal. So that by here kita kena tulis berapa diskaun yang kita bagi dekat the buyer. The next one is account receivable. When a credit customer makes the payment, his account is credited in the account receivable subsidiary ledger. The amount by which a customer's account is credited is entered in this column. Okay, this next one is sales. This column is used to record cash sales. Berapa yang kita dapat, kita letak dalam ini. Okay. The next one is other account. This column is used to record the receipt of cash from sources other than cash sales. Maknanya ada sources lah maknanya. Okay, macam saya cakap tadi. Okay, the next one is cost of goods sold or inventory. In cash receipt, this column is used to record the cost of merchandise sold for cash. This column is also found in sales journal, where it is used to enter the cost of goods sold on credit. This total of column is debited to cost of goods sold account and credited. Okay, we have to remember that it is debited in the COGS and it is credited to inventory account. Dekat mana? Dekat general ledger, bukan dekat sini. Dia dekat account lain pula. Okay. Okay, we go for the next one. Next one is we have to know siapa yang produce cash receipt journal ni. Bukannya customer, sama ada customer atau the seller. Okay. Siapa yang produce? Who produce the cash receipt journal? It is produced by sellers. Sellers, other words, is vendors. When the cash is received from customer from the cash sales, credit sales, cash from other sources, receipt of bank loan, and sales of other assets. For example, marketable securities. Okay, we go for the next one. The next one is account receivable ledger. Okay, we can see here the company name, so we have to state our company name, the seller name, and then kita kena letak date. Okay, apa itu account receivable ledger? Account receivable ledger is a subsidiary ledger of customer account. So maknanya dia account kecil lah, senang. Dia account kecil daripada customer account. Gitu. Which recorded all credit sales. Semua yang record sini ni semua pasal yang credit sales punya. Made by the business as individual sales. The balance in that each customer account is periodically reconciled with account receivable balance in general ledger. So we have to kena sama dia punya balance here dekat sini sama dengan dekat general ledger. Reconcile here maksud sama. Okay, so we can see here kalau balance dekat sini dia cakap 13,000 kan. 13,000, so we have to check in our general ledger whether 13,000 is there or not. Okay, so by that we can ensure our accuracy and whether it is tally with our catatan or not. So the advantages of preparing account receivable ledger is the first one is it is important to gather all the amounts invoiced to customer into one book. Here kan dia tulis semua yang credit sales punya customer tu kan. So here kita masukkan dalam satu buku terus. Kenapa? Sebab dia boleh tolong business yang banyak customer ni, with many customer, to track customer payment and transaction, so that the vendor, the seller would not pening kepala nak cari customer mana belum bayar, customer mana dah bayar. Dah tertukar nanti salah tulis nanti habis. Okay, the second one is avoid mess in general ledger to record all the customer transaction record and is the bookkeeper to navigate the general ledger. Here maksudnya tak nak bagi ada mess, tak nak jadi messy dalam general ledger kita, sebab general ledger kita kena catat semua yang transaction yang happen. So here kita dah catat apa yang credit sales punya. So nanti dalam general ledger senang je kita cari apa yang dah tally from here dengan general ledger. Okay, easy to track the transaction by date and amount made by the customer. Okay, so sebab dia dah tersusun, so kita boleh tahu the customer ni buat payment berapa bulan, amount dia berapa lagi balance dia. Okay, kalau kita gabung dia semua dalam general ledger, nanti serabut. We cannot find the exact date and exact amount that has been paid by the customers. Okay, the last one is monthly statement. Monthly statement is a document sent to each customer. Each customer from who? For sure from the seller, from vendor, right? Okay, what is it about? Detailing the beginning balance of the month carries from previous month. Bulan yang lepas, bukan bulan yang sekarang. And the movement of transaction during the month, like the amount of date each sales, return and cash receipt, and the ending balance due occur. So here kita boleh state the seller can hantar the monthly statement to the customer, so that dia orang boleh tahu apa yang dia orang berurusan dengan our company. Okay, so you can see here in the monthly statement, mula kita kena tulis alamat company kita and then phone number for sure. We have to write all this, so that all these details will help the customer to call kita nak cakap yang dia dah bayar ke, dia belum bayar ke. Okay, so here we can see the date, the type, invoice, description, amount, payment, and balance. The balance here is very important for the customer to know whether how much they owe the company, so that they will know they will pay the company the exact balance that stated here at the top. Okay, and we have to know about siapa yang produce monthly statement ni. So kalau kita dah cakap send to the customer, monthly statement to the customer, for sure it is from vendors or sellers. Okay, it can be in letter or in PDF format, which is sent through the email. It will include the refund from the vendors to the buyer also. Okay, nowadays we can see the technology is very rapidly growing, and most of us tak pakai surat nowadays kan. We didn't receive a lot of letters nowadays. We just receive our update statement just from email. So most of the business nowadays, they orang just use PDF format to hantar the monthly statement to their customers. Why? Because it is very save cost, because they don't need to produce the letter, the paper, they don't have to print and pergi post dekat customer. Itu dah jimat dekat situ. Okay, what is the advantages of preparing monthly statement? We have two segments here, which is for customers and vendors. We have both advantages. Okay, for customers, this will help the customer to keep up to date, and shows them illustration of the value they have received from doing business with the company. Okay, kalau contohlah, okay, kalau kita tak send monthly statement to our customers, so our customer will never know about berapa nilai balance yang diorang kena bayar dekat kita, apa yang diorang berurusan dengan kita. Diorang jadi tak tahu, dia jadi lupa. Dia tahu dia beli, tapi dia tak ingat apa yang berapa nilai dia beli, berapa yang dia perlu bayar lagi. Okay, so by preparing monthly statement, kita boleh cakap kat diorang apa value yang diorang dapat apabila diorang berurusan dengan our company in that previous month. Okay, the next one is they can save money. The customer can save money because why? Because it helps them to pay their debt with our company within short time to avoid more interest charge. Okay, kalau that customer buat credit payment dengan kita, kalau dia bayar lagi lambat, for sure dia kena bayar lagi mahal sebab interest charge tu lagi mahal, lagi tinggi. So kalau dia bayar awal dengan kita, contoh we have set on them every first day of the month, contoh 1 Disember, so dia orang akan bayar dekat kita. So kalau dia orang bayar dekat kita awal-awal, dia orang bayar in banyak terus, dia orang akan save money and don't need to bayar banyak-banyak in the next month. Okay, so then they will have a shorter period nak bayar dia orang punya debt dengan company. Get it? Kalau dia orang bayar lambat, banyaklah kena bayar. Okay, for vendors pula, you can see here to remind the customers to pay their credit payment on time. On time here means macam I cakap just now, kalau we have set dekat that customer tu nak bayar every first day of the month, okay, dia kena bayar hari tu. Kalau dia bayar lambat, dia bayar hujung bulan, tapi dah set date masa the first day of the month, for sure akan jadi transaction tu jadi terabur and then susah nak cari, and then we cannot trace benda tu easily. We cannot trace the transaction made by the payment by the customer easily. Okay, so kalau dia orang pay on time, senang kita nak tengok. So kita tengok list tu, every first day of the month dia bayar. Okay, macam tu senang. Okay, the next one is help the vendors to increase their cash flow. What does it mean increase their cash flow here? So kalau the customer tu bayar on time, kalau dia bayar on time, the company pun akan ada duit. So dia orang akan ada duit, dia orang can avoid cash shortage. Avoid cash shortage here. So kalau dia orang tak ada duit, macam mana dia orang nak beli resources or nak bayar supplier, dia orang nak produce apa produk dia orang on that month. So kalau if the company prepares a monthly statement to the customer, for sure the customer will pay the credit payment, and then it will benefit the vendors also. I think that's all for me. I hope all of you have a good day, and I hope you understand what I have been explaining just now. And I think that's all. Thank you. Bye-bye.
What is sales and collection cycle? Sales and collection cycles involve in process and decision for the transfer of ownership of goods and services to customers. This is happen after the goods are made available for sale, and it begins with request from customer and end with the conversion of material into account receivable and cash. The overall objective to audit the cycles is to evaluate whether the account balance affected by the cycles are fairly presented in according to the accounting standard. For your information, the account may be different depending on the industry and client involved, but the key concept...
Okay, Assalamualaikum and hi everyone, my name is Aini binti Abdul Hakim, and I'm going to share with you guys about the flow of sales and collection cycle. Okay, so the first flow is understanding the internal control structure. So as you guys can see in the slides, it is an overview of sales and collection cycle. So as we all know, sales are recorded in an income statement, which either we are going to collect it in cash or on credit. If it is cash sales, we are going to debit cash and credit account receivable. If it is on credit, we are going to create account receivable that reflected in the balance sheet, and the debit from the account receivable are going to come directly from the sales journal. By that, we are going to reconcile debits to the account receivable. As we should see, the debit to the account receivable account matches what's recorded in the sales journal. Okay, so we shouldn't see debit balance in sales account. This is because the normal balance for sales account is in credit. If we see there is debit balance in sales account, we should have come to a conclusion that the company could have made mistake or error in recording. Okay, so next we are going to see sales return in account receivable. This is because when the company allow customer or client to return goods, they no longer owe us money, and we are going to tie that to income statement for sales return, as there is reduction of sales. This is because the customer is no longer obligated to pay for the goods returned. Okay, so as we can see, that is bad debt, because when the company make a decision that the receivable were no longer collectible. So bad debt expenses deals with provision for doubtful debts. So when the receivable were no longer collectible, we are going to write off the uncollectible account by debit provision for doubtful debt, credit account receivable, and then debit bad debt expenses, and then credit provision for doubtful debts. Okay, so the next one is sales and collection cycle activities. So the first activity is sales order entry. So sales order entry is basically about the company will take the order from the customer, and they will either approve or disapprove the credit, and then they will check the availability of the inventory, and they will respond to the customer. So there will be threads along the way. Okay, so when the customer submitted the order to the company, there will be threads such as incomplete or inaccurate order, and also invalid order. So what does it mean by incomplete or inaccurate order? is when the customer submitted the order, but the name of the order is not even in the system. Therefore, this can be prevented by using data entry controls that will only allow the real name of the products to be appeared. The second threat is invalid order. This can be prevented by using digital or written signature. Okay, so the second threat is during the approval of credit. So the threat is uncollectible accounts. This can be prevented by setting credit limits, as we get to set a certain amount of orders that we think the customer can afford of. Okay, so when the company check the availability of the inventory, there will be threats such as stockouts or excess inventory. This can be prevented by using barcodes or periodical counting of inventory. By doing this kind of control, we can keep track of the item that we had. Okay, lastly, the last threat is loss of customer. This happens because company provides bad customer service or lack of communication with customers. This can be prevented by using CRM system. Okay, so the next activity is shipping. There will be pick and pack and also ship goods. There will be threats too, such as packing the wrong item or the wrong quantity. This can be prevented by using barcodes, reconcile picking tickets, and sales order. The second threat is theft of inventory. We can prevent it by making restriction of physical access of inventory, document inventory transfers, and periodically count and reconcile inventory. The third threat is shipping errors. We can prevent it by reconciling and packing sales document, radio frequency identification, which is also known as RFID system, or enterprise resource planning configuration.
Welcome. Today we're going to talk about the threats and controls of shipping. So let's jump right in. The process of shipping involves two main parts: picking and packing the order, and shipping the goods. Now these boxes are inputs and outputs to this process. For example, when you make a sale, the sales order entry process produces a sales order and a picking ticket. Wait, what's a picking ticket? Well, it identifies which products and quantity of each product to remove from inventory and ship. That's basic enough. It just means what you need to pick from the inventory. So the picking ticket is sent to the warehouse and the goods are picked and packed. The packed goods are sent to shipping, along with the picking ticket and the sales order. These documents are reconciled, and the shipping department creates 2 copies of the packing slip and bill of lading. Now, you probably know what a packing slip is, but you may not have heard of a bill of lading. It's a legal contract that defines responsibility of the goods in transit. The word lading means the action or process of loading a ship or other vessel with cargo. So when you hear lading, think loading. Thus, the bill of lading defines who's responsible after the loading has taken place. The goods are then given to the carrier along with the bill of lading and the packing slip. The copies of the bill of lading and packing slip are then sent to billing and accounts receivable. Sounds simple enough. But before you think it's all smooth sailing, we need to talk about the threats and controls to this process. The first threat is picking the wrong item or the wrong quantity. The second is the theft of inventory, and the third is the possibility of shipping errors. Let's look at the first one, picking the wrong item or the wrong quantity. Gerald here realizes that his pencil is ridiculously large and very impractical, so he orders himself 15 new pens. He sends his order into Acme Co., and Simmons is given the responsibility to pick and pack his order. But Simmons' hearing isn't too good, so he mistakes the order for 15 hens. Now, Acme Co. prides itself on being the largest supplier of both pens and hens in the Northwest, so Simmons doesn't think twice about the order and packs up the hens. And as you would expect, Gerald isn't too satisfied with his order. Now let's say his order comes in and they got pens right, but instead of 15, he got 50. Now, he wouldn't mind, but it wouldn't be good for the company. Another threat is the theft of inventory. You see, Simmons, besides having poor hearing, has a terrible sweet tooth, and he believes that one stolen unicorn from the factory will get him lots of candy. So he takes the unicorn and the business loses some valuable inventory. The last of our threats are shipping errors. These include the failure to ship, sending duplicate orders, or sending to the wrong address altogether. Now we can address each of these threats with the following controls. For picking the wrong order or wrong amount, we can use barcodes or RFID tags to track our inventory. We can also reconcile the picking ticket and the sales order to make sure the order is correct. So you can use barcodes or RFID tags, and you can reconcile the picking ticket and sales order. To address the theft of inventory, we can restrict access to the inventory. We can also use barcodes or RFID tags to track where inventory moves through the warehouse. Or we can document inventory transfers. And finally, we can count inventory and check that against what's in the system. So we can set restrictions to the physical access of inventory, use barcodes or RFID tags, document inventory transfers, and periodically count and reconcile inventory. Let's move on to the controls for shipping errors. First, you can compare the shipping documents with the sales order, packing slip, and picking ticket to ensure that the correct items are being shipped. You can also set up an RFID system, which will identify delays. Finally, you can configure your ERP system to prevent duplicate orders. So you can compare shipping and sales documents, use an RFID system, and configure your ERP system to help prevent shipping errors.
Okay, so the last activity is billing and cash collection. This is when the company will send the invoice to the customer and then record in sales journals and update it in account receivables. So there will be threats too, such as billing errors, failure to bill, theft of cash, and also cash flow problems. So how to prevent billing errors? We can prevent billing errors by using data entry controls or automatically enter present data. Failure to bill can be prevented by separating billing and shipping. We can also prevent theft of cash by using logbox and electronic fund transfer, or also known as ERT. The last threat is cash flow problems. We can prevent it by depositing cash daily or reconcile our bank account. Okay, so the second flow is preliminary analytical procedures at planning phase. So the purpose of doing these preliminary analytical procedures is to understand the client business and transactions, to identify financial statement accounts that are likely to have errors, and to allocate more resources to investigate those accounts of high risk, that is those accounts with material misstatements. So there is assessment of inherent risk. In examining the sales and collection cycle, the auditor should consider the inherent risk factors that may affect the both sales revenue and cash receipt transactions and the financial statement account affected by those transactions. Okay, examples of inherent risk are business-related or industry-related factors such as competitiveness, changes in technology and government regulations. For example, due to the decline in competitiveness, the company may face a declining sales volume which can lead to operating losses and poor cash flows. Second example is the presence of misstatements and previous audits indicates that it is likely that a misstatement to be present during the current year audit. The third example is illegal acts and related party transactions. These are examples of inherent risk factors that may affect the sales and collection cycles. Okay, so let's move on to preliminary assessment of control risk. The purpose is to evaluate the effectiveness of internal control risk for preventing material misstatement in the financial statement, plan the nature, timing, and extent of testing, evaluating the effect of information technology on clients' accounting systems, availability of data, and the need to use computer-assisted techniques. There are two tools such as internal control questionnaires. These are the examples of the ICQ, and you can also find out more in the workbook. For instance, are pre-numbered sales order used? Are pre-numbered bills of lading used? Are all credit sales approved by the credit department before shipping?
Control risk assessment revenue. We want to understand the revenue process based on a reliance strategy and document it. So we're going to test the internal controls with relation to the revenue process, Then, of course, document that. That's going to be part of our audit evidence. Plan and perform test of controls on revenue transactions. So we're going to have to testing of controls on the revenue transactions and set the control risk for the revenue process and document it. So then we're going to basically say after the test of controls with relation to the revenue process, we want to set what the control risk will be. And remember, the control risk relates to the ability for the controls to detect a material misstatement. So we want to be able to set the control risk, consider the inherent risk, and then think about how much substantive testing that we will need to do. So we'll need to get an understanding of the control environment. An understanding of the control environment is usually done on an overall entity basis. In other words, we're kind of considering within the control environment the overall attitude towards internal controls within the entity. That's usually done from a top-down perspective. What's the attitude at the top with relation to the control environment that usually flows down or flows through the entire organizations. Entities' risk assessment process. Understand how management thinks about risks that are relevant to the revenue process. Auditors should estimate the significance of the risk and assess the likelihood of its occurrence. Then we consider the control activities. These are the actual activities that are going to be set in place within the control system related to revenue. It's the auditor identifies the controls to ensure the insurance for transactions and events are being met. Documentation of the auditor's understanding of the revenue process may be accomplished by using. So we're going to document this information with possibly procedural manuals. What are going to be the procedures within this process of the revenue recognition? And remember, the control activities are the actual controls that are going to be in place. So now we're thinking about how can we document our understanding of the actual controls that are in place. We could use procedures manuals to get an idea of what the controls are in place and document those controls. A narrative description of what the controls are. We might put it in a narrative form. We might have a flowchart that'll give us the major components within a flowchart type format of the system as it goes through the revenue recognition process. And we might have an internal control questionnaire that could be set up as part of our documentation with relation to the control activities as well.
Okay, so the next tool is Flowchart. This is an example of Flowchart of credit sales. But I'm going to explain to you of my own example of a company named Apollo. So basically, the flowchart starts from your left side until your right side, which means we will start first from order entry until accounting department. So let's focus on order entry first. Okay, customer orders are received in the mail, over the telephone, over the counter by sales clerk in the marketing department. The clerks prepare return sales order for telephone and counter customers, sign each one and ask the counter customers to sign in person. The sales order contain the customer name, customer number, customer address, identification of the product, and also the quantity that they ordered. Okay, that's all for the order entry, and then let's move on to the credit department. This is where the sales clerks prepare an estimate of the dollar amount of the order and write it on the form. The sales order are then hand carried to the credit manager, who is in the treasurer's department. The credit manager checks the customer's account receivable, balance, and other credit file information using a computer-based inquiry system. If credit is approved, the credit manager signs the sales order. Okay, if the credit is not approved, the customer is asked to pay in advance, and the sales order is held until the notification of payment is received from the cashier. The sales order is stamped, paid, and sent to the billing department. Likewise, when customer pay cash over the counter, the money is taken by the cashier and the sales order is stamped, paid, and sent to the billing department. And then we will move forward to billing department. For bookkeeping convenience, these CAL sales are treated the same as credit sales, with the invoice amount being charged to an account receivable set up for the customer and the customer's payment being applied immediately to the same account. So after the credit has been approved or a payment received, the sales order are sent to the billing department in the controller's office. The billing clerks produce a 4-copy sales invoice on a pre-numbered invoice form. By using screen facsimile on a personal computer, they insert the customer product information from the customer order, the date, and the product unit prices for an approved price list. Sales taxes, delivery charges, and the invoice total are computed and put on the invoice. The sales invoice forms are kept in a locked closet in the billing department, and sheets in numerical sequence are removed only for billing clerks' immediate loading onto the computer printer. Okay, so copy 1 and copy 2 of the sales invoice, the customer order and the sales order are sent to the account receivable accounting department, which is also in the controller's office. These documents are held in invoice numerical order in a pending shipment file, awaiting matching with copy 4 of the invoice, which was first sent to the inventory storage department as authority for the storekeepers to put the order together, move it to the shipping department. So copy 3 of the invoice is sent to the shipping department where it is initially held in a pending release file. Okay, so upon receipt of an invoice of copy 4, which serves as the authorization to move goods to the shipping area, the inventory storekeeper supervises removal of shoe products from shelves and bins. Copy 4 is sent to the shipping area with the products. In the shipping area, shipping employees remove copy 3 from pending release file. They check both copy 3 and 4 for the correct quantity for each product, then pack the order in suitable boxes. Copy 3 is sent to inventory records department in the controller's office, where it serves as the source of entries to reduce the perpetual inventory records. If any items shown on the invoice are not shipped, the handlers are supposed to alter the invoice copies to show the correct quantity. And then last but not least, when customers are on the premises, they can pick up their own orders at the shipping area where they are asked to sign copy 4 as acknowledgement of receipt. Otherwise, pre-numbered bill of lading is filled out in 2 copies for shipments by contract truckers. Copy 1 of the bill of lading is attached to the shipment, and copy 2 of the bill of lading is sent with the invoice of copy 4 to the account receivable of accounting department.
Okay, so for billing customers and recording sales, there are few control activities such as customers should be correctly and timely billed. Next is ensure that sales journal and the account receivable subsidiary ledger are updated frequently to provide latest information. The test of controls are examine copies of sales invoice for supporting shipping documents, for example, bills of lading and customers' orders. Next is select a sample of set of sale invoice and examine for the numerical sequences. This is known as the completeness. Examine documents for unbilled shipments and unrecorded sales at any time. This is also considered as a completeness. And last but not least is observe the mailing of monthly statements to customers by a properly designated person. This is considered as assistance and accuracy.
Welcome. Remember our friend Billy Cash? Well, today he's going to help us learn about billing and cash collections. In this video, we'll talk about the processes, threats, and controls for both of these parts to the revenue cycle. So let's talk about the process first. Let's say that Jen receives a sales order from the sales order entry process along with a packing slip and bill of lading from shipping. Jen uses these to create an invoice, which is then sent to the customer. She will then record the sale in the sales journal and update the accounts receivable for this customer. At the end of the month, Jen takes this information and drafts up a monthly statement that is also sent to the customer. The The cash for this sale is then collected when the customer pays this invoice. After the payment comes in, it is recorded on the remittance list, and the payment is deposited in the bank. The remittance list is then sent over to accounts receivable, where Jen updates this company's accounts receivable. And then files away the remittance list. A quick side note. There are two ways companies can bill customers. They can use either an open invoice method or a balance forward method. Using the open invoice method, Company A sends an invoice to Company B. Company B processes the invoice and sends Company A their payment. So it's a one payment to one invoice method. Using the balance forward method, Company A would send several invoices over a period of time and then send a monthly statement to Company B. Company B would process all of these and make one payment to Company A. So here the method is one payment to many invoices. Now that we've gone over the process, let's talk about the threats that can occur during billing and cash collections. The threats for billing are a failure to bill, billing errors, posting errors in accounts receivable, and inaccurate or invalid credit memos. A failure to bill means that our customer never gets their invoice. For billing errors, a customer could be billed the wrong amount based on the quantity ordered. And for posting errors in accounts receivable, well, it's just that. Errors are posted in accounts receivable. With inaccurate or invalid credit memos, a customer who should receive a $10,000 credit based on returned goods could be given something like $100,000 of credit. Now let's move over to cash collections. The threats here are the theft of cash and cash flow problems. A payment may come in, but it ends up in our employee's pocket instead of our bank account. And problems with cash flow mean that payments aren't coming in on a regular basis. Now that we've reviewed the threats to these processes, we'll talk about the controls to mitigate each of these threats. To address a failure to bill, we should separate billing and shipping functions. We can also compare our invoice against a corresponding sales order, picking ticket, and shipping documents. So you can separate billing and shipping functions and periodically reconcile invoices with sales orders and shipping documents. To address billing errors, we can use data entry controls. We can also auto-increment the amount due based on pricing data saved in the system. So we can use data entry controls and automatically enter pricing data. For posting errors in accounts receivable, we can also use data entry controls. Thus, we can only allow the proper data to be entered into any of these fields. Sending monthly statements to our customers also addresses this threat, along with comparing what's in our accounts receivable against our batch totals and subsidiary accounts. So we can use data entry controls, send out a monthly statement to our customers, and compare our accounts receivable with batch totals and subsidiary accounts. For inaccurate or invalid credit memos, we can separate credit memo authorization from sales order entry and customer account maintenance. We can also configure our system to block any credit memos that don't have the corresponding documentation, so we can use segregation of duties and correctly configure our ERP system. For cash collections, we can separate our cash handling functions from our accounts receivable and our authorization of credit memos. We can also reconcile what's in the bank with what we have on record. Theft of cash can also be deterred by using a lockbox, electronic funds transfer, and financial electronic data interchange. Additionally, we can have two people open all mail, and we can deposit our cash on a daily basis. So we can separate our cash handling function, reconcile what's in the bank with our records, use lockboxes EFT and FEDI, have two people open all mail, and deposit cash daily. Well, that's it. Congratulations for mastering the revenue cycle. It sure has been fun.
Okay, so the next one is processing and recording cash received. The control activities are all cash and check received should be recorded in cash receipt journal and deposited in the bank on a timely basis. Accounts receivable subsidiary ledger should be updated promptly, and policy of granting cash discounts must exist. The list of tests of controls are: observe the procedures of handling cash received to ensure that the persons are completely independent of the handling accounts receivable function. This is known as assistance. Ensure that cash and checks received are banked promptly and in type. This is also known as assistance. And last one is control account reconciliation is prepared promptly and having supervisors review. This is considered as accuracy.
Reconciling other accounts such as accounts receivable or accounts payable, reconciling disbursements and deposits through those different accounts. If you look in your text, Exhibit 6.3 talks about tests and controls for cash receipts. One, you want to make sure that cash receipts are deposited intact daily. So an auditor might test that control by observing the process. So when checks come, if companies, if the policy is that checks mail is opened at the beginning of the day, an auditor wants to observe that that's being done, observe that two employees are involved in, and they would surprise them, right? You don't want to announce to the client, oh, I'm going to observe your process today. You want to just show up, right? Why do you think that is? Why does it matter? John? Right, they're on their best behavior, right? If they know that you're going to do it, if you announce to them that, oh, I'm going to come in today and look at you, then of course they're going to be there, they're going to do what they want to do, right? They're going to do everything by the book. When I was an auditor, one of the things I hated was auditing banks, cash counts. And we just would show up at the bank and a branch and said, oh, we're here to count cash, and we had to surprise them. Right? We couldn't. The only very senior level, because you can't just show up at Bank of America and just say I'm going to count the cash. Somebody in the organization, senior, has to know that the auditors are going to come in, right? So you just show up and count cash, because then you're catching people off guard, right? And the same as an auditor, even if you did this once, you want to even surprise them again and do it, because once you've done it, then like, okay, the cash counters, they've observed it. If you're doing something wrong, you can go back to doing it. But if the auditors are there and then they just show up again, you catch them off guard. You want to create some element of surprise or uncertainty. You don't want the client to know every single thing you're doing every time, right? Because in that way they know your audit approach. You want to also make sure that a listing of all checks is being prepared and then compared to the total deposit ticket for the total checks. Again, this is reconciling, right? Making sure and it's documentation. A client should be documenting cash receipts or cash disbursements, tracing the deposit ticket to the bank, and then for example, they want to also look at controls that ensure that deposits are reconciled to the accounts receivable subledger. So they could take a sample of the daily postings and reconcile that or tie that back to the accounts receivable subledger, and that would be completeness. So occurrence deals with that, right? So if you have two employees opening the mail and it's a valid, you're looking to see that it's a valid cash receipt, that it actually occurred. Looking at the comparing the
Assalamualaikum
checks
and
to,
a very good evening. My name is Mama Aidil Wafiq, grade year 3 from SC 1105B. So in this slide, I will be explaining regarding the cash collection cycle. So let's get started with the first one, review of preliminary assessment of control risks. The purpose of test of control is to evaluate the effectiveness of the design and also the operation of internal control structure policies and also procedures. As a result, it will enable the auditor to determine the assessed level of control risks for revenue and also receipt cycle stations. So what will happen if the evaluation of deviations reveals as a failure? Therefore, the auditor may conclude that less reliance than planned may be placed on the specific internal controls. Thus, it will result that the assessed level of control risk should be increased for the related financial report stations. And also, the auditor will then modify the nature, timing, and also extend the planning substantive procedures to be performed. Next, moving on to the substantive test. So, what is actually substantive test? Substantive test is actually an audit procedure to examine the financial statements and also examines the supporting documents to see if they contain any errors. So, why is actually we need to do the substantive test? Well, actually, these substantive tests are needed as evidence to support the assertions that the financial records of an entity is complete, valid, and also accurate. So, these are the examples of common audit procedures. First one, inspection of documents. Second one, physical inspection. And then inquiries and also observation, followed by confirmation. For example, you need to contact customers to make sure that the account receivables balances are correct. And then re-performance and also recalculation to make sure that the calculation is correct without any omission. And last one, analytical procedures. These audit procedures can be explained further with these examples, such as issue a bank confirmation to test ending cash balances. Second, contact customers to confirm the accounts receivable balances are correct. Observe the period end physical inventory count. Confirm the validity of inventory valuation calculations. Confirm with experts that the fair values assigned to assets obtained through a business combination are reasonable. Physically match fixed assets to fixed asset records. Contact suppliers to confirm the accounts payable balances are correct. Also, contact lenders to confirm that the loan balances are correct. And last, review board of directors minutes to verify the existence of approved dividends. So, as you can see with the given examples, substantive tests are more likely to include with the confirmation of account balances with the third parties, recalculating the calculation made by the clients, and also observing the transactions due. So next is about types of substantive tests. So basically, there are two types of substantive tests. First one is test of details. Tests of details are applied at the substantive testing stage. This includes sales, credit notes, and also allowance for doubtful debts. The second one is analytical procedures. Analytical procedures are applied at the several different stages of audit. These include sales versus cost of sales, sales commission, and also sales discounts. So, what will happen if the substantive test turns up errors or misstatements? So in this case, additional audit testing may be required. Also, a summary of any errors or any misstatements found is included in the management letter that is shared with the client's audit committee. Substantive tests may also be conducted by a company's internal audit staff. By doing so, it can provide assurance that internal recordation systems are performing as planned. If not, the system can be improved to eliminate the issues, thereby providing for a clearer audit when the external auditors conduct their tests at the year end. And also the last one, internally conducted substantive tests may occur throughout the year.
Next is internal control. Internal control is a process or procedure that company put in a place to protect asset, to promote effective operation, as well as to ensure the accurate accounting and record keeping. An effectiveness system may prevent and detect errors. An organization that is lacking in internal control may be tend to do an errors, fraud, and misstatement, whether intentional or unintentionally. Next, in order to understand and document the internal control, there are 6 major functions in a typical sale and receipt cycle, which are process customer orders, shipping goods, billing customer and record sale, process and record cash receipt, process sales return and allowance, and lastly is writing of bad debt and providing for doubtful debts. The first function is processing customer order. In a control activities, all customer orders should be checked for credit limit and proper authorization. This is mean if there is any credit limit exceeded, the special order is needed. After that, the orders should be matched with invoice to follow up delivery and billing. All the outstanding orders should be prepared periodically for management review and actions. Next, in control activities. In a control activities, an auditor may check the orders for proper approval on granting credit to both existing and new customers. This means the auditor may check the business document for approval signature, stamps, and others, which indicate that controls have been performed. Besides, an auditor will audit the sales order form to identify if they are properly accounted. And lastly is, the auditor may audit and ensure that outstanding orders are properly followed up and sequence checks are done by the senior staff. The second function is a shipping goods. In the control activities in shipping goods, all goods and orders cannot be shipped without any prior approval, and the shipping notes should be pre-numbered and keep them to relate to the sale invoice or orders. Next is a test of control. The auditor may select a sample of shipping document to ensure that shipment of goods are done after proper authorization. Besides that, the auditor may ensure that the deliveries of goods are recorded and properly accounted for by using pre-numbered dispatch notes. And lastly, the auditor may audit the duplicate of goods delivery note for customer's signature as evidence of receipt of goods.
Okay, so my name is Nur Amira Alisha binti Shahrin and I am from AC 1105B. So today I am going to talk about test of control for audit 339. Okay, so what is test of control? Tests of controls are the activities that an auditor performs to ensure that the internal control procedures are effective as to both its design and operation. There are three situations where tests of controls are performed. The first one is auditor satisfies that there are indications of effective internal control based on the results of preliminary assessment of internal control. Second, there are a lot of time to complete the test of control. And the last one is the availability of resources such as staff of the company. There are situations where the test of control is not performed even though the internal control is in existence. And there are also instances where tests of controls are the substantive tests are performed simultaneously. Okay, so there are four types of tests of control. The first one is inquiry. Inquiry is the process of asking for an explanation from the client relating to the control process or transactions. For example, we may ask the client's personnel for an explanation about inventory counting procedures at year-end. Inquiry is a type of test of control that can only provide limited evidence, as the client's employee may not tell us the truth. Also, they may tell us very good control procedures that are described in the paper, but they may not properly perform such control procedures in practice. The second type of control is observation. Observation is the process of looking at the procedures that are being performed by the client. For example, we perform this type of test of control by observing the inventory counting procedures that are being performed by the client at year-end. This is to make sure that the internal control of inventory exists and the procedures are as described. It is similar to an inquiry. Audit evidence we gather using observation is also limited. This is due to when the client's employees know that they are being observed, they may try to be more diligent in performing internal control procedures than when they are not being observed. Okay, next is inspection of documents. Inspection is the process of examination of supporting documents related to control procedures. For example, we may inspect the bank reconciliation report to make sure it exists and the procedures are as described. For example, is a preparer and reviewer are different persons. This type of test of control can provide us better evidence comparing to inquiry and observation. This is due to we inspect the physical evidence that the control procedures are in place and performed by the client's personnel. However, we usually perform the physical inspection on a sample of records as it could be impractical to perform on all transactions. Hence, there is usually sampling risk involved here. Last but not least is reperformance. Reperformance is the process of auditors reperforming the control procedures that we perform by the client. For example, as auditors, we may reperform the procedure of bank reconciliation that was performed by the client's accountant. Reperformance is the most reliable type of test of controls and provide us better assurance comparing other types. This is due to we gather direct evidence on how the control works. The downside of reperformance is that it is a very time-consuming process as we need to reperform the whole process of the control procedures that the client has already performed.
In this video, we're going to discuss 4 types of tests of controls. But first, remember that the whole purpose of the tests of controls is to assess control risk. The auditor needs to know the extent to which they can rely on the client's internal controls during the audit. If you don't believe that the internal controls are reliable, then you're going to need to increase the amount of substantive testing that you do. And when you're looking at these controls and you're testing the controls, you can look at the control design. Was the control designed well? If it were to be implemented, would it actually work? And then you can also look at the effectiveness of the control. The control might have been designed really well, but if no one is applying the control, if the wrong person is applying the control, or if the control isn't being applied consistently, then it's not going to be effective. So let's jump to the 4 types of tests of controls. So we can have inquiry. Inquiry is the least effective in terms of evidence of tests of controls. You basically go and you ask questions. So you can ask the warehouse manager about the policy for releasing inventory from the warehouse. So you've got the inventory in the warehouse, and not just anyone can come and take inventory out of the warehouse. They're going to have some kind of authorization policy. And so you can go and talk to the warehouse manager about that. You can also do inspection of documents, and what you're trying to see is some kind of verification that the control was actually applied. So for example, let's say that we're looking at sales invoices, and maybe the company has a rule, and this is a very good rule, that the customer purchase order number, so they say they want the purchase order number to be entered on every single sales invoice. Okay, so whenever there's a sales invoice sent to a customer, we want to make sure that there's a purchase order number on that sales invoice to make sure that there was actually a legitimate sale and that we're linking it to an actual purchase order. And maybe the company also says, okay, they have somebody that their job is to go through some of the sales invoices occasionally and look and see were they actually having the purchase order numbers entered on them. And then they might put their initials, like I might put the MM, and to indicate that I looked at this sales invoice and verified that the purchase order number was there. So if you are the auditor, you can go and inspect some sales invoices and see, okay, is the purchase order number there? And also you can look at if the company has a policy where someone's supposed to put their initials when they verified that, you can look and see, do I find that actually somebody initialed this, that the appropriate person initialed and actually checked this? And if you find that, oh wait, they don't have any purchase order numbers on their sales invoices, or maybe very frequently the purchase order number is absent, or nobody's initialing it at all and so forth, then you say, okay, well, I don't know that this internal control is being effective. Now, in terms of observation, you can go and see, is the internal control actually being applied? Observation just means watching, right? So you would stand there and watch, for example, as the company counts its inventory. So inventory control, one is to go and do a periodic count, and you could actually watch and see, are they doing a careful job counting the inventory or not? Another thing that the auditor can do in terms of test of control is they can reperform an activity. So when we think about applying the actual internal control, the auditor could go and apply the internal control themselves. So an example of that would be if you went and did a bank reconciliation. And so then what the auditor is doing is saying, look, I'm going to go, I know that the company was supposed to do this internal control of reconciling the cash balance per the bank with the company's cash balance per its financial books. The company was supposed to do that themselves, but the auditor could go and say, I'm going to do the bank reconciliation myself. I'm going to apply the internal control and then see if you get a consistent result if there are any kind of issues.
Okay, another example of internal control is processing sales returns and allowance. The control activities or sales return and allowance should be promptly investigated and then recorded with confirmation. The second one is pre-numbered credit notes should be issued and recorded promptly. And the test of controls for these control activities are examine credit notes to ensure that they are pre-numbered and sequentially accounted for, and examine relevant documents such as correspondence with customers, credit notes issued with approval, and etc. Okay, the last example of internal control is writing off bad debts and providing for doubtful debts. The control activities are credit manager's approval should be obtained and adequate allowance should be provided for outstanding debts. So the task of controls are examine the policy for bad debts, written off, and provision for bad debts, examine documents such as bad debt written off form, to obtain evidence of where the policy has been followed up and authorization has been granted. The third one is examine manager's approval for calculation of provision for doubtful debts.
Abdurrahman. So in this slide, I'm going to present about how to audit sale and collection cycle. First and foremost, during the interim audit, the internal control system is documented and evaluated. This will determine the means of test of control and substantive procedures, but both will tend to focus on transactions that have been occurred in the period. During final audit, the auditor will focus on the assertions of transactions that prepared by the management, which mean the transactions including sales during the accounting period and account receivable balance including asset, liabilities and equities in the statement of financial position at the end of the period. There are three classes of the assertions of transaction that used by the auditor, which are sales transaction, cash receipt transaction, and account receivable balance. And we should bear in mind that the assertions is by the management. The first class of assertion is sales transaction. The first one is occurrence. The entity should record all the transaction and event that have been occurred and required. The second one is completeness. All existing sales transactions should have been recorded. This means the transaction should have been recorded without omit or miss. The third one is accuracy. The amount and the data relating to the transaction and event should be recorded appropriately. This means that there have been no error while preparing the transaction and posting the transaction to the ledger. The fourth one is timing. The transaction and event have been recorded in the correct accounting period. And the last one is classification. The sales transactions are properly classified and recorded in the correct period. For example, the sales of product should have been recorded in the sales account rather than purchase account. The second classes of assertion is cash receipt transaction. The first one is occurrence. The entity should record all the cash received by the company. The second one is completeness. All the cash received should have been recorded in the ledger. The third one is accuracy. The cash receipts are recorded at the amount received and correct amount. The fourth one is timing. All the cash receipts are recorded at the correct dates and periods. The last one is classification. The cash receipt transactions are properly classified and recorded in the correct account. The last classes of assertions is account receivable balance. The first one is existence. The entity should record all the account receivable that are really do exist without any overstatement. The second one is right and obligation. All account receivable are valid. This means that the entity has a legal title or control the rights to an asset or the obligations to repay the liability. The third one is completeness. All account receivable are recorded. This mean that there must be no omission, understatement, or overstatement of an asset, liabilities, and equities. The fourth one is cut off. The account receivable transaction around the year-end date is included in the appropriate accounting period. The fifth one is valuation and allocation. the account receivable are included in the financial statement at appropriate amount. And the last one is presentation. All event, transaction, and other matters relating to the account receivable of the entity are properly presented and disclosed, which means that the disclosure of assets and liabilities are relevant and easy to understand.
Okay, what does it mean by test of control? Test of control is the main component of internal control of an organization, no matter which cycle they are pertinent to. It's the management adoption and adherence to high ethical standards and strong control. According to the professional service firm, tests of control of the revenue cycle include who accept and approve the credit sales, the separation of duty, filling out, shipping, and recording sales order, appropriate documentation for collecting and depositing cash and recording receipt, the appropriate authority and documentation to grant discount for early or cash payment and sales return. And the last one is the management authorization to determine that an account is uncollectible and should be written off as bad debt. The next thing is assertion. Assertions are defined to be representation by management, explicit or otherwise, that are embodied in the financial statement and are used by the auditor to consider the different type of potential misstatement that may occur in the organization. Okay, types of control can be categorized by three, which is the sales transaction, cash receipt, and account receivable. Okay, let's look at the sales transaction. The first assertion is occurrence. The procedure is to examine a proper approval for customer order, delivery note, and sales invoice, and to observe the independent handling of complaint about monthly statement of the company. The second one is completeness. Completeness is to check the numerical sequence and completeness of the delivery note and sales invoice, and to trace the delivery note to the related sales invoice and entries in the sales day book. The third one is accuracy. Accuracy procedure is to examine proper approval for customer order and delivery notes, and examine indication of internal review for recording sales transaction. The fourth one is timing. Timing is reviewing document for unbilled shipment and unrecorded sale and compare with the date of delivery note, sales invoice, and entry on sales journal. The fifth one is classification. Classification is to review chart of account and independent review of the proper classification. And the sixth one is cutoff. Cutoff is a year-end sale cutoff should be independently reviewed. The next one is a class of cash receipt transaction. The first assertion is occurrence. Occurrence is to observe the segregation of duty and independent reconciliation of bank balances. The second one is completeness. Completeness is to observe the immediate preparation of incoming check listing and endorsement of income check. The third one is accuracy. Accuracy is to review the periodic bank reconciliation prepared by the independent person. And the fourth one is timing. Timing is to examine evidence for daily deposit of cash receipt and review of bank reconciliation. The fifth one is classification, is to trace cash receipt to cash receipt journal for proper classification and review cash book for unusual item, and inspect the signature of proper approval. The last one is cutoff, is to compare entity date and the date of the daily cash summary. The third one is the account receivable balance. Okay, the first assertion is existent. Existent means is to select sample from debtor list and set debtor confirmation. The second one is right and obligation, is to review bank confirmation for account receivable pledged to the bank. The third one is completeness. Completeness is to trace sample of delivery note to the related sales invoice and entry in the sales day book and debtor ledger. The fourth one is cutoff, is to review the account receivable transaction around the year and in the debtor ledger and trace the supporting sales invoice and delivery notes to ensure that they are recorded in the correct period. The fifth one is valuation of allocation, is to examine evidence of approval allowance for bad debt. And the last one is presentation and disclosure. Presentation and disclosure is to review evidence for internal review for proper disclosure for those accounts with pledging of account receivable that are related to the party of transaction. Okay. How to audit? Audit programs based on sales transaction. The first way is to ask if sales invoice is independently matched with sales order and shipping document, and verify by checking for initial. The second one is to ask and observe the mailing of monthly statement and examine customer correspondence file. The third one is to select a representative sample of the entry from the sales journal watch to customer order, sales order, bill of lading, and sales invoice. The fourth one is to ask and observe the use of pre-numbered sales invoice and shipping document. Inspect evidence that numerical sequence has been accounted for. The fifth one is to select representative sample of shipping document. It's whether watch to sale invoice, trace to entries in the sales journal, trace to the posting to account receivable ledger, check for evidence that goods have been shipped independently, counted, and description and quantities are compared to sales order. The sixth one is to select from sales journal entry. Perform recalculation to check the arithmetic accuracy, watch price to approved price list, watch to shipping document, watch to approval from credit, and the last one is select sample from the credit note. Okay, the first one is to inspect authorization. The second one is to check arithmetical accuracy of price, extension, and footings. The third one is to watch posting to customer account, its subsidiary receivable ledger. How to audit based on the audit program cash receipt transaction. The first one is to inspect evidence of independent bank reconciliation. The second one is to review procedure for segregation of duty, ask and observe about the mail route and cash handling procedure. The third one is to inspect evidence that entry in cash receipt journal have been independently compared with daily cash summary and posting to subsidiary receivable ledger. The fourth one is to select a representative sample of recorded cash receipt, is either to watch to a validating bank deposit slip and watch to predict and remittance advice. The last one is to select a representative sample of daily cash summary. It's either to trace to entry in cash receipt journal, perform recalculation to check arithmetical accuracy. The third one is to trace posting to general ledger, and the fourth one is the trace to bank statement. That's all. Thank you.
These are 5 assumptions for substantive procedure for sales transaction. First, we have occurrence. The auditor needs to select sample from sales journal and trace it to sales order, sales invoice, and delivery note. Next, completeness. The auditor needs to trace delivery note or sale invoice to entry in sales day book and debtors ledger. Third, we have accuracy. Watch data of sales invoice to relate customer order, price list, and delivery note. They also need to trace sale invoice to record sales. Next, we have timing. The auditor need compare dates of record sales transaction with dates on delivery note. Last, we have classification.
The auditor need to examine supporting document for sales transaction and evaluate it whether the transaction are properly classified. These are 5 assumptions for substantive procedure for cash receipt transaction. First, we have occurrence. The auditor need to trace from cash receipt journal to bank statement and proof of cash receipt. Next, completeness. The auditor need to trace delivery note or sale invoice to entry in sales day book and debtor ledger. They also need to trace the incoming check listing with the bank statement and cash receipt journal. Third, we have accuracy. The auditor need to trace from cash receipt journal to sale invoice, bank statement, and proof of cash receipt. Next, timing. The auditor need to compare date of cash receipt listing, paid in slip, and entry in cash book. Last but not least, we have classification. The auditor need to examine documents supporting cash receipt for proper classification.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Faradana. So after all of my friends has been explaining about this topic, sales and receipt cycle, here I am to explain more by discussing past year question, June 19, question 5, that relates some of it with sales and receipt cycle. So I hope you guys can prepare the question, June 19, question 5. Okay. The question said that Karen, Shida and Associates have performed a thorough review of 3 main subsystems of Dickens Berhad. Dickens Berhad is a new audit client. The company supplies car parts directly to workshop in Melaka and it does not have any retail outlet. The following narrative description were provided by one of the team members. So I'll be reading the sales and cash receipt cycle only. I hope you guys can read the others. So sales were made on cash and credit terms. For cash sales, a pre-numbered cash bill is issued and delivered together with the goods to the customer. The cash is collected immediately by the delivery person at the point of delivery of goods. For credit sales, a pre-numbered sales invoice is issued and faxed to the customer. The payment is usually received by check. The account clerk is in charge of receiving the checks from credit customers and he is responsible for preparing a list of all checks received on a daily basis. The particulars of the customer's name, amount received, and check numbers are written on the list. Checks are deposited daily by the account executive and the account clerk uses the list of checks to update the daily collection in the cash receipt journal. So, the the question asks us to discuss any 5 major weaknesses, explain the possible effect, and suggest a recommendation to overcome each weaknesses that we have found. Recommendation. So the question asks us to present the answer by doing this table, which is weaknesses, possible effect, and recommendation. So I have prepared some. Okay. So after we read the question, kita dah baca semua, kita daripada sales and cash receipt kita dapat baca, kita dapat jumpa tak ada, kalau semua perasan, tak ada discussion between the customer and the workshop. The customer and the workshop tak ada perbincangan antara mereka tentang harga yang ditawarkan kepada customer tu. Maksudnya kat sini customer tu boleh tak agree dengan harga yang diberikan oleh workshop. Contohnya macam contoh customer rasa harga yang diberikan oleh workshop ni terlalu mahal untuk mereka. So dia boleh disagree dengan benda tu, tapi dalam situation ni, dalam situation question ni, dia tak ada discussion about that. Dia terus agree. Yes. There's no discussion between the customer and the company and the workshop. So that's the first one I have found, which is there is no discussion made by the workshop supervisor for the price of the service. So recommendation for this workshop is there must be price quotation should be given to the customer before the job is undertaken. Sesuatu kerja yang dijalankan oleh workshop tu buat, sebelum workshop tu buat sesuatu, dia kena discuss dengan customer. So the customer agree or not, and yeah. So that's the first one. The second one that I found is there is no segregation duties by the general clerk over the safekeeping, ordering and issuance of the spare parts and components. Dekat sini kita dapat tahu macam general clerk, the clerk boleh ada misappropriate the spare parts and the component. Masih boleh dia salah letak between them. Ada possibility dekat general clerk tu dia misappropriate the spare parts. So the recommendation for this company, for this workshop, is the various duty of the general clerk should be monitored and supervised by the responsible officer. Maksudnya duties yang banyak-banyak oleh general clerk tu patutnya monitor and supervise lah daripada responsible officer. Supervised by responsible officer. Next, I have found that the other two, kita dah jumpa dua tadi, 1, 2, 1 and 2. Okay, next saya jumpa dekat sini dia cakap the account clerk is in charge of receiving the checks from credit customer and he is responsible for preparing a list of all checks received. Maksudnya kat sini account clerk tu banyak buat kerja. Lepas tu the particular of the customer's name, amount receipt semua dia buat written on the list. Next, saya jumpa a soft copy of the approved purchase order is sent to the supplier by email. Maksudnya kat sini dia bagi soft copy of dia orang punya order sent to the supplier by email saja. So the thing is soft copy of the approved purchase order tu dia tak ada proper. There is no proper documentation and approval made for the cash payment for the supplier. The effect dia boleh jadi general clerk might easily misappropriate the business cash. The general clerk might also pay incorrect amount to the supplier. Maksudnya sebab dia tak ada proper document, so boleh jadi general clerk tu salah bayar. Maksudnya sebab dia tak ada benda yang dia boleh rujuk, so dia boleh jadi general clerk tu salah bayar kepada supplier. And for the recommendation, I recommend this workshop to do a proper document such as payment voucher should be prepared. Maksudnya dekat sini kena ada payment voucher and approved prior to issuance of the business cash. Maksudnya lebih teratur, lebih ada maklumat macam tu. And then the next one, proper documents such as payment voucher. And the next one is there is no proper segregation duties between handling of physical cash and maintenance of the cash receipt journal. Maksudnya dekat sini dekat yang ni lah. Okay, dia kata tak ada segregation duties. Maksudnya general clerk ni banyak dia buat semua. Okay, so, macam saya cakap tadi dia buat semua kerja. Mostly semua kerja. Maksudnya dia boleh jadi dia misappropriate the cash collection by not recording the amount in the cash receipt journal. Okay, so the recommendation, the thing is dia banyak buat kerja, duties between handling of physical cash and maintenance. Okay, sorry, typo sikit. Segregation duties between handling of physical cash, maintenance of the cash receipt journal. So dekat sini dia ada dua kerja kan. So the general clerk should handle the duties should be handled by 2 different employees. Tak boleh lah dekat general clerk sahaja. Dekat sini saya nak. Okay, the last one is the cash bills are not pre-numbered. The possible effect boleh jadi missing cash bills might not be detected. Maksudnya dekat sini bila kita tak pre-numbered dia, susah nak cari. Susah nak cari cash bills, susah nak detect cash receipt tu. So the recommendation is the cash bills should be pre-numbered and accounted for. Okay, so thank you. I hope you guys understand about apa yang I explain. here I am to conclude all of my friends punya presentation. So in this topic, we know that the flow for, kita dapat tahu flow for sales and collection cycle sebab my group explain about sales and collection cycle. So lepas tengok video semua, saya dapat tahu lah the flow for sales and collection cycle. Next, that dokumen yang kita dapat tahu dokumen yang boleh digunakan untuk setiap transaction. What document can be used for each transaction. Okay, so dekat sini dokumen contohnya macam Ideal, Izan dan Syahir dah explain setiap dokumen and the others dah explain setiap dokumen yang boleh digunakan untuk setiap transaction tu. So if you guys tak faham lagi, boleh ambil lagi. And then they're able to identify the internal control of problem of a company and suggest possible solution. Maksudnya dekat sini saya dah explain tadi dekat past the question, dia boleh suggest possible solution. Sebab saya dah jumpa, dah identify the problem and then terus suggest problems, possible solution. So yeah, that's all from me, that's all from my group mates. I hope korang, saya harap semua penonton, semua viewers boleh faham, and if tak faham tengok balik. So yeah, I think that's all. Thank you for spending your time to tengok kita punya video, and yeah, thank you.